Hello, and welcome to Ancura YouTube Tuesday. My name is Tracy Robertson, and I'm the Director for Sponsored Research Accounting at Princeton University. Our discussion today will focus on metrics, more specifically, how metrics can improve financial performance. Metrics are commonly used by organizations as a tool for measuring success in the management of critical activities and processes. Specifically in a financial compliance environment, metrics can aid research administrators in measuring risk related to key areas such as cost transfers, effort reporting, and meeting key deadlines for financial reports and award closeout deliverables. There are three key benefits of metrics that I want to discuss today. The first key benefit of metrics is driving performance. The use of metrics allows employees to assess how their individual and/or team performance contributed to their organization achieving or failing to achieve optimal success in critical business processes. Metrics can also show bottlenecks in current processes and help us to determine whether the bottleneck is a result of lack of training, systems, bad processes, or no processes at all. The second key area is change behavior. When employees are able to see the individual or team impact of their contributions through metrics, it creates a sense of ownership and accountability at every level within the organization. Employees no longer see themselves as merely employees, but also as stakeholders who are invested in the organization's success. The third and final benefit of metrics is to support investments in research administration infrastructure. Metrics can provide leadership with insights as to where attention and resources are needed. It provides concrete information that improves decision-making and allows managers and leadership to better understand and identify opportunities to improve compliance, financial management, and operational performance. Metrics can also be used to inform and support short and long-term decision-making by identifying key activities and business processes that need improvement and how they are prioritized. On this next slide, you'll see an example of how we use metrics in a financial compliance environment. So as you'll see here, in July of 2009, we developed our metrics. Our on-time submission for invoices and reports. Our on-time submission was as low as 60% at one point for invoices and 48% for financial reports. So what did? We looked at our business processes, we looked at our systems, and we also took this information and gave it to the staff in the post-award office who were actually doing the day-to-day work. Over 2 years, as a result of updating our business processes, being more transparent with the data, and also implementing short-term system solutions, we were able to increase our invoice on-time submission by 35% and increase our on-time financial reporting by 48%. So when you're thinking about metrics, it really is important for you, and I would recommend taking a focused approach, especially when first getting started. This will allow you to more quickly implement successful, lasting, and measurable improvements. There are four key areas in which you could focus: operational performance, compliance management, financial cost management, and customer perception. As you're thinking about this, you should start asking some questions. You need to determine what metrics to track. You need to identify the systems that will deliver the outputs or the metrics that you are looking to track. And then you need to analyze the output to ensure the integrity of the metrics that you're trying to track. So some things to consider. Who is the audience for your metrics? The wrong metrics or the wrong audience will greatly diminish the value of the metrics. Is the data what's the data integrity? Is the data that you are using to populate the metrics accurate? Is the correct logic being used? And have you established standard process for entering the data? The interpretation of the data. Are assumptions being made? And if they are, what are the basis of those assumptions? And finally, know what each data field means. If necessary, develop a data dictionary. This will help you at the very beginning when you're running your metrics and at the end when you're trying to interpret and then report out your metrics. This concludes our session for today. Thanks for watching.